All right, I'm gonna start recording, and then you can just I'll post this on YouTube. All right, so this is a market maker kind of like advanced, like yeah, this is a market maker like advanced order flow type deal. So everybody understands like mitigation blocks and stuff like that, but I feel like order flow is really hard to understand. It's really hard. Like people think market structure like this for an example. People think, oh, we're breaking highs. Okay, we made a higher high, we broke structure, or this is a market structure shift. First, you have to identify the draw. It's probably this high. I'm guessing. I'm not saying I took this, but I'm guessing this high was a draw, probably a 10 pip stop run, or 10 to 20 pips. Looks like it ran up to almost 30. But say if this was the buy side, or this is like, I guess, the turtle soup, um, and this is the market maker sell model. I'm gonna put out the sell side of the curve, and then the buy side of the curve. So there's a lot, and once you start, I'm telling you guys, once you start to understand how it's supposed to get to your draw and come off of your draw on liquidity, then it market maker models are not even like in the question. You just get an idea of how price should get to a draw on liquidity. So, and I'm gonna show you guys one that's not even a market maker model, and it's crazy. Okay, and this is probably gonna change your guys' perspective. I'm gonna show you guys in a market maker like perspective, and I'm gonna show you guys one in the just regular order flow. Um, Regular order flow. You'll see. You'll see. But let me just put this as the buy side of the curve and the sell side of the curve. So when you're in a market maker model, right, and you get that change in the state delivery or the market structure shift that you guys want to see, the left side of the curve is the most important, right? It's the mitigation blocks. This is how you can anticipate breakaways. You see these mitigation blocks, right? The reason why I'm choosing these is because it's old buying turning into old selling. So think of it as like you're actually a market maker, like an actual market maker. So the moment, because if they're trading with large funds, right? They're if they're trading with large funds, they're trying to get out. I'd say they're probably going to get out as soon as it turns into profit. So they're selling immediate. So they're starting to, as prices coming up, they're selling. The moment it drops, it's selling. Right? They're all like the market makers aren't in drawdown. Right? The moment it comes back to the old buying, they get out. Right? They're getting out their positions as it's going down, right? And that's how basically the market kind of runs, bro. So as they're buying up, they're selling. In the moment it crosses that same point where they were selling, which is old buying that we see on the chart, they're getting rid of their positions by distributing all of it, and then they get rid of it, all of it at the lows. So they're already getting rid of it as we come below old buying, which is the down close candles on the left side of the curve. Um, and this in a way is how I like to see which PD arrays are likely to hold and how breakaways are supposed to form. So like if you see that this is a mitigation block, right? The moment price starts to trade below it, it's gonna stay below it until we hit terminus, which is these lows, right? Because we got the buy side of the curve and then we got the sell side. These fair value gaps were probably the best opportunity, right? You want to couple the left side with the right side. And I'm going to show you guys examples where it doesn't even look like a market maker buy or sell model. I'm going to show you guys actually of it by a trade that I think I took. Yeah. But as we're going down, we hit this fair value gap. This one should hold, right? It should stay beneath old buying that was here. So it's kind of like inversion order blocks, I would say. So if we're going down, then that means up close candles should support price. So that means as we're going lower, this should support. It didn't get hit, but I know that it's probably going to be holding on the lower time frames. This was supporting price. Trade up, trade down, cross the opening price. Then we start to go lower. This was holding price. This was holding price, right? But this is on the right side of the curve. This is the order blocks that are supporting price. But if you look on the left side, you can see that order flow is also respecting the same order blocks that was taking us higher. So the order blocks that was taking us higher is the same order blocks that's going to take us lower, which is quote unquote our mitigation blocks, right? And then you can couple it with the PD arrays on the right side. So like this big ass fair value gap coupled with this mitigation block, and this isn't financial advice, but you can put your stop above that. And this is how you can anticipate and know that your stop is not going to get ran, because you know that order flows on your side, because up close candles on the right side are supporting and down close candles on the left side are supporting going lower. And yeah, let me show you guys an example on just like regular order flow. This is actually the wrong chart. Let me find it. I think it was on NASDAQ. Was it? Oh man, which one was it? I think it was on here. Hold on, guys. I gotta find it, bro. No. Damn. Maybe it was on here. Was it on YM? Damn, I really can't find it. I'll probably cut this part out. Oh, here it goes. All right, so like this really doesn't look like a market maker buy model, right? It doesn't look like a market maker buy model. The draw was not clear. I was using order flow to get me in the macros. I don't want to talk about that, but the draw to get me to this high and midpoint of this this SIBI. I'm not going to draw out the box of the SIBI, but what I'm trying to say is everything still applies, whether it's a market maker model or not. It's order flow. All it is just order flow. So the moment we come down, right? There was an SMT with, I believe, NQ. NQ was dropping down, but I'm still trying to explain order flow, how the left side and the right side like correlate with each other. So the moment that we cross opening price of this down close candle, right? So this is going to be the left side, and then this is going to be the right side. And depending on what type of trader you are, you can take it into the draw or off of the draw. You can be the left side of the curve type person or the right side of the curve type person. And then you just let time get you in there, whether it be the silver bullet or whatever you like, bro. Then that New York Open, it doesn't matter. But order flow, the only old selling that I see, right? I don't want to talk about this volume imbalance either. The only old selling that I see is all these green candles. And you can see as we trade above it, this green mitigation block, it's going to be treated as support. And you notice how there's no original consolidation on my chart. There's none of that. It's just buy side liquidity, and it's just order flow. I'm not marking out a market maker model. To me, everything is a market maker model. I'm gonna be honest with you, because there's always going to be a left side or a right side of the curve. There always is. And you see that in this mitigation block, once you trade above it, you couple it with PD arrays on the right side. So we have this volume imbalance right here. I didn't take it off it, but as we was going higher, bought as we're starting to tap into this fair value gap, offloaded some once we traded above this high. We came back down, touched this order block. But what I'm trying to show you is the moment we traded above this mitigation block coupled with this volume imbalance, right? It could be a SIBI, it could be an order block, it could be anything. You can even say that there was a breaker here from this low, high, low, higher, high, right? We come down and hit the breaker. I didn't see this as a breaker, but this is a breaker as well. And you couple it with the left side of the chart, and then it's going to be old selling turning into old buying, right? But that's a little lesson on, I guess you could say advanced order flow. And yeah, that's pretty much it for the day.